Hi everyone, this is the fifth video in a series that will cover all of the concepts you need to know for your IB Business Management final exam. This video will cover all of the key concepts for Unit 5 Operations Management at a high level. At the end of this video, we will share with you the next steps depending on how familiar you are with the content. First up is Unit 5.1 on the role of operations management. Operations is about planning the processes involved in production, including quality management, supply chain management, and making decisions about locations. These production processes can either be capital intensive, which involves a heavier reliance on machinery, or labor intensive, which involves a heavier reliance on labor. There are four broad ways in which a business can choose to produce. The first is job production, where each product is made individually and tailored to a customer's specific requirements. A great example of this is tutoring, where a tutor would have to consider the individual student's requirements in developing a plan to help them improve. Due to the level of customization, there is often increased willingness to pay from the consumers. But job production is resource and labor intensive. The second is batch production, which is where goods are produced in groups called batches. This is more efficient than job production and provides greater flexibility, but requires increased stock management and is more difficult to check for quality. Mass or flow production refers to the continuous production or large quantities of standardized products that are produced. This is common among products like toothpaste or soap. This helps a business capture economies of scale and maximize efficiency, but has very limited flexibility and requires significant capital expenditure on machinery. Finally, mass customization is a combination of mass production and job production, providing some flexibility while still producing high quantities. An example of this are phone cases. This method combines the benefit of job and mass production, but is significantly more expensive than the other methods. This is an HL-only topic, so standard level students feel free to skip straight to Unit 5.4. Lean production is all about streamlining manufacturing processes by minimizing waste and improving efficiency. One method to do this is Kaizen, which means continuous improvement. This involves a business making small but incremental progress to improve productivity and efficiency. Another method is just-in-time, which is a stock control system that removes buffer stock or backup inventory, meaning deliveries are only made if and when businesses need them. Finally, businesses can use cradle-to-cradle manufacturing, which uses inputs that can be reused or recycled in order to help eliminate waste. Operations management is also concerned with quality. Businesses take an approach of quality control, which is a reactive process to ensure that substandard products don't reach customers. Quality assurance, on the other hand, is a proactive process that seeks to identify and eliminate the mistakes in the first place. Businesses often implement a combination of these approaches to maximize efficiency. There are four methods of managing quality that you need to know. The first is quality circles, which involves small groups of employees who meet regularly to discuss operations-related problems. This can encourage collaboration and increase ownership over work for employees, but generally only works best for minor, small-scale changes. The second is benchmarking, which involves comparing the firm's processes and products to industry leaders. This can help a business identify areas in which it is lacking relative to competitors, but it is also a very resource-intensive process. Third is total quality management, or TQM, which is about developing a culture of quality in the organization, aiming to shift the way employees view dealing with quality. If successful, this can significantly improve quality and efficiency, but requires a culture shift and buy-in from all employees to be successful. Finally, quality standards help ensure that products and/or processes meet recognized standards and guidelines. This can be a source of differentiation for companies, but generally results in increased operational costs to comply with the standards. Unit 5.4 is all about where a business chooses to produce. There are several factors that can influence where a business chooses to locate, such as access to resources, government policy, access to customers, and local infrastructure. Each of these can make production easier, cheaper, and more efficient. There are two ways in which a business can change the way they produce or operate. The first is outsourcing, which involves hiring an external or third-party provider to perform a function previously done by the business. For example, many businesses offshore their tech support to India. This helps the business lower labor costs and focus on the key parts of their business while taking advantage of the third party's specialty expertise. On the other hand, outsourcing makes it difficult to maintain quality, and there is a high degree of dependency on the third party. Note that the opposite of outsourcing is insourcing, where the business moves a function it had previously outsourced back in-house. The other is offshoring, which involves physically relocating a part of the business to another country. The business is still in control over this function when offshoring. This is normally done to take advantage of lower costs and more relaxed labor and environmental laws. However, it is associated with unethical practices and leads to job losses in the home market. Note that the opposite of offshoring is reshoring, where the business moves a function it had previously offshored back to the home market. How much does a business need to sell in order to cover its costs? That is a question the break-even analysis aims to answer. Central to break-even analysis is the formula break-even quantity, or BEQ, which is equal to total fixed costs divided by price minus variable cost per unit. This number represents when total revenue equals total costs. In other words, profit is equal to 0. The easiest way to illustrate the break-even chart is in a simple example. Imagine a business that sells ice cream. It has total fixed costs of $20,000 and charges $10 for each tub of ice cream. Variable costs for each ice cream are $5. The case also tells us that the business currently sells 5,000 tubs each year. The first step is to calculate our break-even level of quantity. Applying our formula, we get that the break-even level of output is 4,000 tubs. With this, we can calculate the total revenue and total costs for the business at both the break-even and current level of output. The total revenue formula is calculated as price times quantity. At the current output level, total revenue is 5,000 times 10, which gives you $50,000. At the break-even level of output, the total revenue is calculated as 4,000 tubs times $10, which gives you $40,000. Total cost is calculated as the total fixed cost plus the total variable cost. At the current output level, total cost is $20,000 plus $5 times 5,000 tubs, which gives you $45,000. At the break-even level of output, total cost is $20,000 plus $5 times 4,000 tubs, which gives you $40,000. We always do this first step so we can make sure we have done our calculations right. If the total revenue is not equal to the total cost at the break-even quantity, go back and check your answer because you have made a mistake somewhere. With this, we have all the information we need to construct the break-even chart. Before we begin, make sure you title your chart. This is the easiest way to lose a mark even if everything else is correct. First, we want to label our axes, with revenues and costs on the y-axis and quantity sold in the right units, and in this case, tubs, on the x-axis. The first thing is to plot the total fixed costs. Remember that the fixed costs are those that don't change with output. So regardless of quantity, the cost stays the same. This makes the TFC line a flat line. Next, we plot the total cost line. To do this, first identify where the line would pass through using the break-even and the current level of output. For example, in this case, we know that at 4,000 tubs, total costs are $40,000, and at 5,000 tubs, they are $45,000. Be careful to remember the total cost line does not start at the origin of the graph, because even with zero output, we still accumulate fixed costs. Use the base of the total fixed cost line as your starting point and connect the dots for your total cost line. We then apply a similar concept to the total revenue line. Here, we know that when quantity is equal to 4,000 tubs, revenues are $40,000. And when quantity is 5,000 tubs, revenues are $50,000. When we sell 0 tubs, we make $0 in revenue. So this line starts from the origin. Connect the dots for your total revenue line. We aren't quite finished yet. First, we have to label the break-even point, which is where the total revenue line intersects with your total cost line. Finally, we have to calculate and show the margin of safety, which is the current output level minus the break-even level of output. This represents how much more the break-even quantity the business is selling, with higher being the better. We recommend that you also label areas of profit and loss. While this is not necessary, this demonstrates to examiner that you have excellent command of these concepts, and if you're lucky, they might be willing to overlook a small structural error as a confidant. This was a super simplified example of constructing a break-even chart, but the steps to apply all these types of questions. You might also get questions on this topic related to how much should a business sell to make X dollars in profit, or what price should a business charge to earn X dollars in profit. For a more in-depth walkthrough of constructing a break-even chart and to learn how to calculate these types of questions, you can check out our videos on break-even analysis under the quantitative skills section of the Diploma.ly website. Standard level students, this is a short unit for you, and you are done with all the materials. You can skip right to the end to learn where you should go from here now. Unit 5.6 on production planning is a content-heavy topic for higher level students, which we expect will be tested more frequently in Section A of the new Paper 2. The first part of this topic focuses on supply chains, which are the processes involved in the creation or delivery of a product or service from a supplier to the customer. Effectively, it is how and where the product goes from its raw materials to the person who buys it. This can occur at the local level, where you're sourcing locally, or global level, where you're sourcing internationally. Local supply chains are easier to manage and have less delays, but often lead to higher costs due to less choice for the business, with the exact opposite being true for global supply chains. The way in which businesses source from suppliers is also important. Just-in-time, or JIT, are stock control systems aiming to reduce waste and increase efficiency, which you already learned in the previous content video in Unit 5.3. By ordering only when the materials are needed, a business reduces its costs and maximizes efficiency. However, a business has to rely heavily on its suppliers to deliver on time, and there is limited flexibility. By contrast, just-in-case is where a business maintains large buffer stock, or extra stock that they hold. This provides a business with greater flexibility to meet demands, but leads to higher storage costs and the potential for spoilage of their stock. To track how much stock they have, businesses use stock control charts, which you will also need to know how to draw. Like any charts in business management, start with your title and axis, with the stock level on the y-axis and time on the x-axis. The case information will be explicit in telling you what the maximum and minimum level of stock the business can hold. The difference between this is called the reorder quantity, or how much the business orders when they reorder their stock. The case will also tell you at what point a business reorders, which is a reorder level, and you should label this on your stock control chart as well. Finally, you need to label the buffer stock, which is the extra stock a business keeps in case of emergencies, and the lead time, which is how long it takes for the materials to arrive after it has placed a reorder. For an in-depth walkthrough on how to construct a stock control chart from scratch given case information, check out the videos under the quantitative skills section of our Diploma.ly website. Before producing, a business must first decide if it is more efficient to make the product in-house or to purchase it from a third party. This is called the make or buy decision. This is one of the easier quantitative concepts in this unit. As to calculate the cost to make, you only need to find the total cost, which is the total fixed cost plus the total variable cost. And to find the cost to buy, you only need to multiply the price per unit times quantity purchased. Remember that this only tells you quantitatively what a business should do, and that other factors like supplier quality and reliability can also influence the decision. Once a business has enough stock it can produce, businesses measure their production through capacity utilization, which is a measure of a firm's current output as a percentage of its maximum potential output. Firms who operate at full capacity utilization, in other words, producing as much as it can exploit economies of scale due to efficient production, but face the risk of overworked employees and higher capital expenditures as equipment must be replaced more often. A business must also measure its defect rate, which looks at the number of substandard products produced as a percentage of the total production. Lower defect rate are indicative of higher quality production processes. Businesses who also want to measure their productivity, they can measure labor productivity, which is how efficient workers are, and capital productivity, which measures how efficient their equipment is. Remember that these concepts can also be tested quantitatively if you are asked to calculate any one of these metrics. Check out our quantitative skills videos on how to just that. Sometimes businesses need to respond to a crisis, which is an unexpected event that has the potential to significantly disrupt the organization. The process of responding to a crisis is called crisis management, which is a reactive response taken by the business to protect their reputation and minimize disruption to operations. To plan for these crises, a business needs to create a contingency plan, which are proactive plans and strategies to execute and follow in the event of a crisis. For example, creating a fire escape route is an example of a contingency plan, while openly and honestly answering questions in a press conference about an issue would be part of crisis management. These crises can come in two types. They can be quantifiable, where the impact can be measured, or unquantifiable, where the risk cannot be measured. For example, if the top 5 clients leave the firm because of a scandal, the business can estimate the dollar value of revenue lost. On the other hand, they cannot estimate the loss for something like COVID-19. There are 4 factors that influence how well a business handles a crisis. They are transparency, which is honesty with stakeholders, communication, which is clearly explaining what has happened and the steps that the business is going to take to respond, speed, so having a prompt response, and control, which is deciding how and when information gets out. All of these factors aim to primarily preserve brand image. Finally, you need to know the impacts of contingency planning on organizations. At a high level, effective contingency planning can help minimize losses during a crisis, ensure the safety of employees and key stakeholders, and enable the firm to better prepare for any risks. However, contingency planning generally involves a very high cost, and businesses can never truly prepare for the impact of an event, especially when it is unforeseen. Research and development, or R&D, are processes taken on by businesses to innovate or improve their current offerings. R&D can help a business improve product quality, reduce costs, and tap into new market segments, but is expensive and isn't always successful. Ultimately, every business needs some form of R&D in order to evolve and improve. Sometimes businesses with promising ideas may not be able to bring that product to market. This could be because the cost of R&D is too high, uncertainties around market size and demand. On the flip side, businesses sometimes create products that customers don't even know they want. Netflix is a great example, as there are no specific demand for streaming when it first came out. Innovations through R&D can be classified in one of the two ways. The first is incremental innovation, which are small continuous improvements to current offerings. An example of this would be the newest version of the Apple iPhone, which takes something that already exists and makes minor upgrades and improvements. Disruptive innovation would be innovation that creates new markets or disrupt existing ones with something new that alters the market landscape. For example, Uber was the pioneer in the ride-sharing industry. Another example is Netflix, who changed the way people want to watch TV shows and movies. To protect themselves from their R&D being stolen, businesses use intellectual property rights, or IPR, to give them control over how the invention will be used by putting legal restrictions on who has access to the technology. This also acts as an incentive for firms to do more R&D. There are 3 types. The first is trademarks, which are symbols or logos associated with a brand. For example, Nike's swoosh logo, or Just Do It, would be examples of a trademark. This helps protect the firm's brand identity. Second is copyright, which protects the original work of authors, such as those in the entertainment or software industry. Finally, patents protect inventions and processes for a limited period of time, giving the inventor the decision on where and how it is used. Our last topic on management information systems is a content-heavy one. Data analytics is the analysis of data sets in order to find trends. For example, a company may collect sales data from its different stores to uncover trends. This can help a business make more informed decisions and improve operational efficiency. Databases are a collection of structured information or data. For example, businesses use databases to store information like a customer's name, email, and purchasing history. They allow for information to be easily accessible in a secured way. Cybersecurity are the policies of a firm to protect its data and prevent unauthorized access. For example, a business will have antivirus software to prevent any unauthorized attacks on their systems. This helps build customer trust and ensures the firm is in compliance with regulations. The Internet of Things is the network of devices and sensors that exchange information via the Internet, which can provide more personalized customer experiences. An example of this is fitness trackers, which can analyze your workout and activity to provide you personalized insights as to what you should do to achieve your fitness goals. Virtual reality is the technology that creates simulated environment, providing users to interact in a 3D space to replicate real-world scenarios. This can be used in the medical field to help aspiring doctors to train in different surgery scenarios. AI is a simulation of human intelligence within machines which aim to solve problems. The most well-known example of this is ChatGPT. Big data are the large and complex data sets that cannot be handled by traditional processing application, which help for more informed decision-making. Finally, customer loyalty programs are marketing strategies to reward customers for their loyalty by incentivizing repeat purchases with discounts or points. Any combination of these tools can be considered critical infrastructures for a business, which are systems that are key to the functioning of the business. MIS to monitor employees, which is the practice of digital Taylorism. This can help a firm identify high performers and those in need of more training, but workers may feel the firm lacks trust and that they lack autonomy in their work. While you need to know these different types of MIS, the most important thing is to understand how they can impact the business and stakeholders. MIS can help a business get a better understanding of customers and other stakeholders, helping them improve customer service and make more informed strategic choices while reducing their costs. However, MIS also has risks including vulnerability to cyber attacks, over-reliance on technology, and the increased costs of monitoring, managing, and securing the systems. Don't forget about ethics, as how and where the data is used and shared is also an important consideration. The most important thing in this topic is to know why a business would use these types of MIS, how it might benefit them, and what the risks may be. If you have made it this far, congratulations! The content part of this video is over. A quick word on exam strategy in relation to this unit. One common question we get is what types of content is most likely to be tested. In Unit 5, historically Unit 5.2, which is operations methods, Unit 5.4, which is location, and Unit 5.5, which is break-even analysis, are commonly tested topics. For higher level students, we expect more quantitative questions relating to Unit 5.6 on production planning, so make sure you study this very well. At this point, you might be wondering, where should I go from here? Take a moment to reflect on whether you are comfortable with all these topics. If the answer is no, you can find more detailed versions of each topic I have covered on our website, diplomally.org, with the videos arranged by which topic and unit they fall under. These videos will explain each concept in more depth and outline in more detail how and where they might be tested in your exam. For qualitative concepts, we recommend looking at the review videos, and for quantitative concepts, we recommend looking at the quantitative skills videos. If you're comfortable with this material, you should move to practicing case studies and mock exams. If you want to practice specific concepts in this video, head over to the case studies section of our website, where you can choose cases by topic or by unit. If you want to practice the unit overall, then go to the by unit section. To take this one step further, you can also try the comprehensive cases, which focus on the full business management syllabus in the exact same style as the final paper 2, or try a full-length mock exam. Be sure to review each of your responses, not just looking at the mark scheme, but the full-length exemplar response we have provided for you, which represents a response from a student who would have scored full marks. If at any point you are unsure on how to answer the question, check out the response structure sections of our website, which helps you understand how to answer every type of question in business management. We hope this video was useful for you in studying for business management. If you're looking for additional help with business, please feel free to reach out to us via email at info@diplomally.org or via WhatsApp. If this video was useful for you, please like the video and subscribe to our channel. Thanks for watching, and best of luck in your IB final exam.